Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Mike Vere, CEO of Zest AI, to discuss lending to underserved demographics. Mike, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me.
All right, you got it. And we know the Fed has paused. We know their outlook is hawkish. They are not going to change their strategy until that core number gets to 2%. What effect will this have on underserved Americans looking to secure loans with higher interest rates and during a potential economic downturn?
Yeah, I mean, frankly, it's going to crush that segment of the American population. I mean, let's start from the beginning. 9 out of 10 credit decisions are made from one company that has a stranglehold on the market. And so the average American really gets choked out with the system that was set up decades ago that has significant amounts of bias. Now, when you apply that to difficult financial times, most banks and credit unions start shifting and they just issue credit to really A-tier paper. But that's not most of America. And so the people who need it really are on those middle tiers or underserved populations, and they really start pulling away and or hike up those interest rates.
How can AI increase the visibility of available loans and better serve all Americans, particularly those underserved demographics that may face loan discrimination or accidental racism?
Yeah, well, there are two pieces I talk about. So first off, it's the technology. And so, the math that the current system is built off of was math from the 1950s. And so I think in the 1950s, it was Plato was invented, with the stuff we play with. Elvis was at the top of the charts. There were poodle skirts and things of that sort. There's just better math, and that better math can consume more data about the average consumer. And why that matters, it's a higher fidelity image of every borrower, right? I have kids, and it's as if you're looking at Minecraft with all the blocks on the screen. It's not high fidelity. That's the current system. And so having that higher fidelity image is the technology where you're applying AI in the underwriting process. The second part, though, is being purposeful about how you build that AI. And that starts with the people that you have and ensuring that you have a diverse group of people that are actually building the model itself, ensuring the data you're using is representative and that you're not adding bias by adding in creepy data assets like social media or things of that sort. And then the third area is being purposeful about how you build the model. Is that constantly looking and striving to identify signals in there that may be a proxy for race or gender or other protected class status, and you actually tune those down so that you have the best of the both worlds. You have this more accurate decision or a smarter decision, but at the same time, you can be more inclusive to underserved Americans.
And that's such a great point that you bring up, because while there's a lot of good that can happen with AI and the related technologies, it's only as good as the input that's put into
Sure.
the system. And then, of course, you have to think about the output as well. Anyone can interpret a data set. So I think it's also interpreting the results that you get from it as well, where, that human factor still comes into it.
Sure. My grandpa's a carpenter, or my grandpa was a carpenter. And so, you take 2x4s, you can build this beautiful house that you have a family in, or you can take a 2x4 and bang somebody over the head with it. So AI really is how you use it. And so purpose matters. It's being mindful about the model that you're building. And so the tool has such great promise, but we also have to be looking when you're talking to a tech company about what's their purpose, what's their mission.
And you had mentioned before that, the system that has been set up as credit as we know it now, it only takes into account certain factors. What about other areas? What if you pay your cell phone bill or your Netflix or other discretionary items on time?
Sure.
Shouldn't that be factored into it as well?
It's not captured, right? And so you look at, there's roughly 20 variables that, the average consumer gets boiled down to simply a number. And so really the promise of AI is to pull in different data assets, engineer new features. So imagine Christmas time rolls around and my credit utilization is going up. So if I'm using the current system, it's a point in time, and they would say, hey, you're not a good bet. But the fact of the matter is if you look at me, I've got 5 kids. Over the year, Christmas time is quite an expensive time, and it doesn't mean I'm a bad bet for credit overall.
Yeah. What about the recent bank failures that we've seen with smaller or mid-sized banks or even potentially credit unions? How can that impact underserved borrowers?
Well, I mean, the real challenge is that you've got the big banks, which do really well in the urban areas. But when you look at these financial deserts, where especially credit unions in particular are committed to serving communities, but then you have also small community banks that are out there that end up getting crushed in this system. And so it really doesn't serve people well in the end.
What impact are regulators having on advancements coming from AI?
And so from a a regulatory perspective, Zest at Zest AI, we lean in heavily with regulators to stay ahead, and it starts with this belief or a shared value that it's great to help businesses do well and improve their balance sheet. It's great to have them be more inclusive, but in the end, we also have to protect the end consumer. And so, an active engagement with regulators to understand how we can work together to protect every American, not just a few Americans, but every American, I think is going to be critical. I was really hyped up when I saw a recent quote from someone from the CFPB, where they're suggesting that every year, every financial institution should be looking at their lending system and looking if there's less discriminatory alternative models that they can actually access.
All right, certainly encouraging, Mike. We appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you so much. Have a great day.